Welcome to Aha Math and Science. In this video, I like to kind of speculate where the market is going and how does the path to the market bottom will look like during this bear market cycle. Without further ado, let's get started. And in the past few days, in the weekly summary, I kind of shared this chart. This is AAII, which is the American Association of Individual Investors, the investor sentiment survey. So the blue curve is basically the weekly survey of the investor sentiment, and the red curve is the 20-week average. I kind of calculate based on the blue curve. You can see the investment sentiment is still very bearish. So it's hovering around like 25% level, and 25% of the investors are kind of bullish, at the present time. And this kind of sentiment, the bearish sentiment, is comparable to actually really goes back to like a later 1980s. So this is kind of one of the bearish period during the late 1988. And then there's a similar bearish period, which is in the early 1991. So let's take a quick look at what actually happened during these periods. So this is SP 500, and then the pink curve is the Russell 2000. And in 1988, the investors are really bearish. And that was actually kind of doing this recovery mode after the bear market in 1987, and including the famous Black Monday crash, where the index kind of lost more than 20% on a single day. You can see even though the market is kind of recovering, and it's already kind of like a gain more than 20% from the low at here, still investors are very bearish. So this is one of this period that is being very bearish. And then in early 1991, investors are even more bearish than here. Actually, that's not surprising because this is kind of in the middle of a recession, which started from July of 1990 to March of 1991. But actually, the stock market did not really drop that much during actually the recession. So perhaps what's really kind of going on here is it's there could be many reasons, but maybe one of the reasons investors are really kind of worrying that the economy is not in good shape, and then a recession may be coming soon. A recession indeed happened, but it actually kind of like took 18 years from the investors started kind of become very bearish to actually the recession hit. And during this worrying period, even though the investors are very bearish, the market is still kind of worried, even overtake the previous high at here. So these are the things that we need to kind of keep in mind. Sometimes when the investors are really bearish, the market can still go up. So now fast forward to the present time. So we can see that actually, just in the past 2 weeks, the SP 500 really kind of made a weekly, high since August of 2022. So now it won't be really kind of surprising for the SP 500 to overtake the August of 2022 high, and even possibly even kind of start go even higher and hit the levels at these two. This is the left shoulder, and this is the right shoulder of the previous high. So that's going to put us around 45-40 level for the SP 500. Now, based on actually multiple indicators, including Dr. Copper that I just kind of point out, in another video, and it won't be really surprising that actually a recession is on the horizon, and sometime late this year we'll be kind of in recession. This is a likely scenario, and so if that happens, then perhaps the market will not be really kind of push high, and then it's going to be start kind of come back down again. And to what level? Well, at a minimum, I suspect it's going to test somewhere around this low bridge here, which is a very clear support level. And then this is also kind of like kind of makes sense because it would be kind of retest the previous high that was the market reached just before the pandemic. So this level is a very reasonable level. Once actually the market rebound to this shoulder high around 45.40. Now, in this scenario, as you can see that we are assuming that really the economy is going to be in recession and the 2024 is a bad year. It's not going to be a good year for the stock market. But also, we need to keep in mind that actually 2024 is an election year. We want to actually take a look at what actually usually the stock market does during an election year. So this chart kind of provides the data, which is the SP 500 total annual return for each of the year since 1926 to 2022. So this blue bar is actually just kind of this year. It's ongoing, so it's not over yet. So we don't know exactly what happens. So this data is not included in the statistics. So all these years from 1926 to 2022, which is a total of 97 years, 71 of these years actually the market had a positive performance. So that's like 73%. And then the average return for all these years, both positive and negative included, the average return is like 12%. And for during the election years, every 4 years we have an election. Most of the years are also positive, are indicated by these arrows here. And then out of all these election years, we have 4 years actually the stock market closed in red. So these are these years here. And the very recent one is actually 2008. And another one is 2000, another election year. So these are two sort of like really two bear markets. So, in election year can still have a negative year. So, but the statistics says 20 of the 24% years were actually positive. So that's 83% compared with 70%. In other words, there's a little bit of like a edge in terms of shows me a good performance for the stock market. And also the average return for all these election years is 11.6%, which is really similar to actually the all-year statistics. And the only really kind of difference I would say is it is 83% versus the 73%. For the election year, there's a slight edge in terms of the year being a positive year for the stock market. But still, there's a 17% chance the stock market will be in the red even during election year. So what does that mean? Well, in our first scenario, we consider the 2024 is going to be a red year. The market is going to close in red. So if we consider this slight edge in an election year, maybe the market is more likely to be positive than negative. Then this is another scenario, which maybe that somehow the recession will be pushed back towards very late of 2024 and maybe even in 2025. If that happens, then this is the scenario that we would suspect will happen. Again, next few weeks, months, market continue to march high, and then somehow, during late 2023, there will be a correction, and then entering 2024, this correction gonna rise until early 2024, and then in 2024, somehow the 2024 is gonna be a green year, and if that's the case, then there's a likelihood that this increase from here to here and this increase from here to here will be kind of like comparable. So this is kind of like the first leg up. This is another leg up. And that happens, then there's a possibility for the SP 500 to hit the 5,000 level and make an all-time high. And then a recession hits, and then it's going to bring the index back down again. So this is another possibility that we have to consider. So now, obviously, this video is really just talking about two possible paths. The path to the market bottom can be really, there are all kinds of possibilities. And personally, I feel like the first path, which I talked about, that the recession is going to start in late 2023 and then last through like 2024 is the more likely scenario. And the 2024 is not going to be a present year, for the stock market. But again, exactly how the market will kind of plays out, that's anybody's guess, because we are talking about future and nobody really knows about future. So I hoping that this video just kind of provides some some kind of thoughts, to speculate on what may happen next, to the market. So I still hope you have enjoyed this video and I find the information presented here, interesting. Again, your support really means a lot to me, to this channel. So please do not, forget to click the like button and also to hit the subscribe button if you have not done so. So thank you so much for watching.